Today, the 2021 market outlook for corn and soybeans presented by Scott Irwin and Joe Janzen. They're from right here in Urbana-Champaign on campus, an agricultural economist in the College of ACES and the Department of ACE. And gentlemen, thank you so much for being with us today. Scott, I think you'll begin our presentations.
I will. Thank you so much, Todd. And I also want to thank Joe Janzen for joining me today. Many of you may not know Joe. He's a new faculty member here in the Department of ACE and comes to us via Kansas State and Montana State. And I think we've got a really good presentation today. And I just want to get right into it. So, Joe, if you'll go to the first slide. All right. Basically, just going to start off with a little bit of where we've been in terms of price action. Man, what a ride the last 3 months. Here's March soybeans, and we can see that that's up $3 per bushel, or a little bit more than corn. That's up about 35%. So we've gone from the low threes on corn and low eights to mid eights on soybeans to near $11 cash and $4 cash corn. So a remarkable turnaround in the grain market situation. And so what Joe and I are going to do today is basically try to address two questions. How did this happen, and where do we go from here? In other words, the answer of how did this happen is going to help us understand where do we go from here. So, number one factor, next slide, Joe, is exports. And we'll talk about that a little bit in a few minutes. Here's, the place where export sales have been truly red hot in soybeans, the same chart that I just showed you for corn. And we see that we're already up to just slightly more than 1.9 billion bushels of total export commitments for soybeans as of the latest data last week. That's basically a billion bushels higher than last year. And once again, the number one factor is China. 75% of that increase of a billion bushels over last year for soybean export commitments are extremely impressive. We normally expect exports to tail off, particularly in the second half of the marketing year as the South American supplies become available. But we are, not very far from the 2.2 billion bushel forecast that the USDA currently is carrying for the 2020-21 marketing year. In fact, that 1908 is already 87% of the 2200 WASDE forecast for soybean exports in the current marketing year. So even if export commitments tail off dramatically, I think that there's some prospect for exports maybe even being a bit higher than that 2200 figure for soybeans. So we've had tremendous action on the demand side of the grain and oilseed markets, mainly represented by export sales to China. But we've also had some action on the supply side. Here in the US, I think probably everybody knows, it turned darn dry through the heart of the I states late in the 2020 growing season. And this drought monitor for August 25th shows where those trouble spots were in terms of dryness. And then in mid-August came something that was truly unprecedented. A derecho swept through Iowa and northern Illinois and all the way into Indiana. And the combination of the dry weather and the Derecho, it's easy to kind of lose track of this in all of the hoopla about export sales to China. That combination of dry weather and the wind damage dropped the U.S. corn production estimate from the USDA between August and November by almost 800 million bushels for corn and around 250 million bushels for soybeans. So that's a cumulative drop of almost 5 to 6% on the supply side. So that's what's been going on the supply side in the US. Now let's turn to South America. The next chart shows a measure of the El Nino, La Nina oscillation in the Pacific. And what this chart shows, you look clear to the far right, a -1 or greater reading is a strong La Nina, and that's where we have been heading in the last few months in South America, and that has some correlation to dry growing season weather in South America. And it has been dry in South America. This is a 30-day percent of normal precipitation ending on November 27th. And you can see, particularly in northern Argentina, Uruguay, southern Brazil, it has been very dry, although they've gotten some rains in recent days, and also stretching all the way up in a little bit farther north into the Mato Grosso soybean and corn producing areas, but it's not been as severe there. So you have a La Nina and it's been dry. So you put all that together and the demand and the supply side, and you have some pretty explosive conditions for prices. All right, let's look at soybeans now. Really interesting situation on the old crop. What we see is that quite interesting on soybeans between the May and the November WASDE, production actually increased slightly, even though it dropped from August to November. That's mainly based on not quite as optimistic yield projections by the yield projections when we got to August were substantially higher than they were in May. But again, the big story is continued increase on the use side, particularly on the export side, but the combination results in an ending stocks of 190 million bushels, which is down to 4.2%. That's among the lowest ending stocks to use ratios that we have ever seen, and that not surprising in that situation that we've gone from a estimated price in May of 820 to 1040 now. I'm going to use the exact same balance sheet for my own personal forecast for 2021 as the USDA has currently in November, except I think that the evidence is that we're going to end up with a higher price than the USDA is currently carrying. They're using 1040. I think it's going to be something closer to that 1080, 1090. I list 1090 here. So very strong corn and soybean prices in 2021. So of course, that's kind of where we've been recently, how we got to the very high prices. And of course, what everybody really wants to know now is, are we going to stay here? And so I'm going to start with kind of a very early look at supply and demand balance tables for the 2021-22 marketing year. And this starts with this chart. This is one of my favorite charts to think about the supply side for corn and soybeans. This chart shows the composition of total crop acreage in the U.S. on an annual basis going back to 2008 with my forecast for 2021. The total crop pie, as I like to put it, consists of the area that we actually plant to principal crops, the amount that's in CRP, and then the amount that we don't get planted in terms of prevented plant. And if you look for 2019 and even 2020, the prevent plant was a major story in terms of where we ended up in terms of principal crop acreage. So as we look to 2021, I'm forecasting that we're going to begin edging up in total crop acreage in the U.S. We've been around 344 million. I've got us penciled in for an additional 2 million acres based on the much higher prices. And I'm also forecasting a more normal historical average for prevent plant. Of course, that can change based on weather conditions. The end result, though, is look at that green bar for 2021. I'm looking for about an 8 million acre increase in total principal crop acreage as we go from 2020 to 2021, almost to 320 million acres. So we're going to have a large acreage base as we head into the 2020 planting season. Now, what we're interested in, next chart, please, is how is that acreage base going to be allocated, particularly to corn and soybeans, which is what our interest is here. And we have really strong incentives for planting more soybeans. The market is screaming, basically, that we need more soybean acres next year in the U.S. And the last time that we had this high of a ratio of a new crop soybean to corn prices in 2016 and early 2017, we added 7 million acres of soybeans. And so that's basically what I'm going to be forecasting right now for 2021 planted soybean acres. So if we can go to the next chart. So this is the way that I like to think about corn and soybean planted acreage, is to start with the top line on this chart, which shows total corn and soybean planted acreage. And notice that that's a reasonably stable number that has varied basically from around 179 million to 183 million acres. It was a total of 182.8 in 2020. I'm going to bump that up on the improved incentives for profitability on corn and soybeans, and a bounce back in principal crop acreage to 184 million total for 2021. Admittedly, a pretty high number. Then prevent plant, I'm going to forecast that to be lower than we've seen in the last couple of years. And that means the actual planted acreage total that I'm coming up with is 181.8 million, or 6.6 million acres higher than what we had in 2020. Again, largely due to that prevent plant story last year, which was kind of, I think, underappreciated. And so with that base of 181.8 million acres, if we drop down to soybeans, I'm basically going to project that our intended planted acreage for soybeans will go up by 7 million acres, and then with lower prevent plant acres, we'll have a total increase in soybean planted acres. It's a big one, from 83.1 to 90.8, or 7.7 million acres. And basically, that's what's driving the story. And that means we'll have roughly 91 million acres planted for corn, down about 1.1 million. So based on current incentives, that's what I think the situation looks like for planted acreage of corn and soybeans in 2021. And the thing to notice is, with soybeans in my projections grabbing so many acres, U.S. total supply of corn is not going to be able to go up that much unless we have fantastic weather next summer and we have great yields. That potential, of course, is there. But based on trend yields, that's what the supply situation on corn looks like. And in soybeans, with that huge increase in area planted, I'm using a trend yield next year of 50.5 bushels. But again, what's really interesting, given that beginning stocks are so low, even with our production level of 4540, or just a little over 4.5 billion bushels, our total supply of soybeans, again, it's so important to emphasize, including a projection of an additional 7.7 million acres, basically gets us to the same supply level in 2021-22 that we have in our current marketing year. So a really interesting situation. So I want to just briefly touch on use factors. So when we look at going forward, there's just no way that you can't separate out the demand outlook for grain and oilseeds from what's going to happen with COVID. And we've all seen the announcements about the vaccines. They sure seem to indicate that the worst of the pandemic will be over once the vaccines are widely available. And I think we need to factor that into our outlook. Next slide, please. And the most obvious place where that's going to factor in the corn balance sheet is in ethanol usage, which is directly tied to gasoline usage, since every gallon of gasoline in the US contains at least 10% ethanol for all practical purposes. We've had a swish recovery from the springtime lockdowns, basically planing along or plateauing at about down 10%. Looks like we're going to maintain that probably through the first quarter of 2021. But based on that vaccine news, I think we're going to close that gap really rapidly as we head into the spring. So let me end with a discussion of the use side for corn and soybeans. This is the way I see it going forward. In particular, on the use side for corn, I'm looking for a return basically back to the pre-COVID level for 2021-22. Again, that will be well past when the vaccines arrive. So that's my projection on corn use. Exports, I just don't see any way that we're going to keep up the current pace. So I'm penciling in a very robust, but still pretty high 2,400. Gives us total use of exactly 15 billion bushels and ending stocks of 1679, basically the same for 2021-22 as our current year. And I'm going to drop the price forecast down about 20 cents a bushel, though, as we come off some of these kind of superheated conditions down to 380. Might be a little optimistic on the price, but basically, unless we get somehow huge crops in South America, dramatic change in policies in China, or a monster crop next summer in the US, we're looking at much higher, somewhat higher prices, even out into the next marketing year than we have been seeing the last 5 years until just 3 months ago. So now let me finish up on soybeans. And on soybeans, you can see that on exports, I'm having those cool off a little bit, crush cooling off a little bit, and giving us total use just a little bit less in the next marketing year than our current marketing year. But given that large size of the demand base for soybeans, again, even increasing soybean acreage over 7 million acres, it's going to be tough to rebuild those soybean stocks very much. And I think that's why, the market has woken up to this situation and why we have such extremely high soybean prices and such strong incentives to plant soybeans. Assuming we don't get a monster crop in South America this year, and that's why the market's so concerned about conditions down there right now, we really can't have anything go wrong with the U.S. crop in 2021, given the size of the demand base, and rebuild stocks very much. So that's the message that I have, and basically that the outlook for corn and soybean prices is certainly improved. I've got it at $10 for 2021. That might be a little aggressive, but the main message is the downside risk to corn and soybean prices until we get that big acreage next year and big crops in 2021 is not really large. With that, I want to turn it over to Joe, and he's going to give us kind of a longer-term, intermediate to longer-term perspective on China's demand for corn and soybeans.
Right. Thank you, Scott. The current optimism obviously has to do with strong growth in the Chinese economy and the rebuilding of their swine herd following declines due to African swine fever. But the Chinese economy is the one place in the world that's going to be growing this year, growing at about 2% this year, and growing incredibly strongly, forecasts show, for next year about 8%, which is far stronger growth than really any other region of the world. The big question here then is, okay, what's the long run level of Chinese corn imports? And then how much does is the US likely to play a role in exporting corn to China? So this corn demand is really the result of differences between domestic consumption and production in China. And the exports that we've seen of soybeans into China from the United States have filled a very large gap. The gap on the right shows that the gap between Chinese consumption and production of soybeans is massive and sustained. It's been there for 20, 25 years. In corn, the story is a lot different. We've really only seen a gap between domestic consumption and production of corn in China in the last 4 or 5 years. Prior to that, China actually built up massive stocks of corn. They had policies, a minimum support price that encouraged corn production, and production actually outstripped demand in that 2010 to 2015 period. Where does this gap come from? In part, it's because of the inability of Chinese corn producers to fill that domestic gap with domestic production. One thing to note is that Chinese corn yields are far lower than the places that it imports corn from, the United States and elsewhere. And in spite of massive growth in ag R&D spending, yield growth in China is about half of what it is in the United States. And so their trend line yields are right around 100 bushels per acre. As shown on this chart, 2020 would be right around 100 bushels an acre versus US trend line yields. We hit sort of that trend line yield approximately this year, about 175 bushels an acre. So the United States does have this long run comparative advantage in corn production. It's not the only country that does, but there's a reason why the Chinese can't meet domestic consumption needs with domestic production. The other way to fill that deficit is through imports. And I want to sort of just compare and contrast really briefly soybean imports, where we've been sending significant quantities of soybeans to China over the last decade, with the case of corn. So China fills its soybean deficit with imports from both South America and the United States. Prior to the US-China trade war, the US was capturing about 30-ish% of annual demand. This graph shows monthly imports into China from the US, Brazil, and other countries. The other countries, almost all of that is going to be Argentina. And we can see that demand from different origins is very seasonal. So the US will export large amounts of soybeans in that post-harvest period, and then once South American production harvest comes in March, April, May, then it's South America really kind of capturing most of and filling most of that deficit. For corn, the story is very different, much more lumpy, and the demand is much newer. So prior to 2015, 16, there were some imports, but again, still really lumpy, just based on periods when Chinese corn users felt the need to pull in cheaper supplies from elsewhere in the world, that domestic production wasn't sufficient. In the last few years, we've seen that Ukraine has captured the lion's share of Chinese corn import demand, the US playing a smaller role until very recently. So this graph shows, again, imports by month. And it's really just in the last few months that the United States has shipped significant quantities of corn to address that domestic deficit. So there is potentially strong and growing demand for Chinese corn imports. And Ukraine has traditionally gotten most of that, but their exports this year are down substantially on declines in yield. So the USDA is projecting that Ukrainian exports will be down about 6.7 million metric tons, or 30% relative to the 2019-2020 marketing year, and the yield decline in Ukraine was about the same. So the United States will have competition in shipping corn to China. On top of that competition, there's a whole host of administrative barriers, what I'll call administrative barriers, that captures a lot to US-China trade in corn. Specifically, there's a tariff rate quota. So the Chinese levy a very high tariff on imports beyond a certain threshold. That threshold is about 7.2 million metric tons. However, it looks like in the current marketing year, that quota may or may not bind for two reasons. One is that quota applies to calendar year imports. So for the 2020 calendar year, we're probably not going to get too much beyond that 7.2 million metric tons. And the Chinese government obviously can waive the quota and bring in imports beyond that 7.2 million metric ton quantity. Looks like both of those things are going to happen, and that's going to enable Chinese corn imports in the current marketing year to be much larger, and they could keep doing that, but there's always the threat that that quota may kick in because of the political preferences of the government in China. The other thing is that the retaliatory tariffs from the trade war remain in place. So during the trade war, we know there was a 25% tariff put on corn and soybeans. That tariff, in part, made it much more preferable for Chinese importers to source their corn from Ukraine. That tariff was waived in March of 2020, but it's still there on the books and kind of floating out in the ether, and could be imposed again in the future. The other sort of very difficult things to incorporate into a forecast are the fact that many of these imports are mediated by state-owned enterprises, that is, companies owned by the Chinese government. And there may be preferences that may influence preferences to source grain, corn and soybeans from particular countries or deal with particular companies. So recently, large grain trading companies, the ABCDs, ADM, Bunge, Cargill, and Dreyfus signed, and China's own state-owned grain trader, COFCO, signed an agreement with Sinograin, the company that manages state grain reserves in China, to import soybeans from South America. And so again, those sorts of preferential trade deals, not between governments, but between companies, may govern some of this trade. And then there's a whole host of non-tariff barriers, pesticide limits, GMO approvals, things like that could come in and sort of limit the potential for imports. Ultimately, I think the big story here is China is importing a lot of corn because of significant differences between domestic prices in China and prices around the world. We saw prices begin to rally back in early 2020 in terms of domestic prices in China, and a few months later, that's led to this surge in exports and increases in prices, export prices in the US and elsewhere in our major sort of corn exporting competitors. China will import grain when it needs grain and when the market dictates. There is, of course, the phase one trade deal, but I would argue that phase one trade deal is not necessarily a mechanism to force prices higher. The causality doesn't necessarily run from the trade deal to prices, but it also runs from prices to the trade deal. So if China has this vague but big goal of increasing imports from the United States in order to meet a phase one trade deal, they can do that by importing many different products. Corn is certainly not the only one. And they're going to look to where does it make best economic sense to import those products. If they just want to export a lot of stuff to the United, or import a lot of stuff from the United States, excuse me, they can do that by importing higher value products and get to that phase one trade deal dollar amount more quickly. But I think in this case, it makes sense, economic sense, to import corn into China. So with that, I'll pass it over to Todd.
Thank you so much, Joe. Joe Janzen, of course, ag economist here on the Urbana-Champaign campus of the University of Illinois, along with Scott Irwin, also an agricultural economist. We would like to thank all of our Farm Doc sponsors. They include Compeer Financial, Farm Credit, Growmark, the Illinois Corn Growers, the Illinois Soybean Association, the College of ACES here on campus, and of course the TIA Center for Farmland Research. That too is part of the Department of ACE in the College of ACES here on campus. Our thanks to Scott Irwin and Joe Janzen, agricultural economist here on the Urbana-Champaign campus of the University of Illinois. And behind the scenes, Jim Bolts has been running the operation and making sure everything goes well on your end. And what you see, we thank him as well. You have a great day. I'm University of Illinois Extension's Todd Gleason.